Hey everyone, this is Venu Madhav. I take care of operations and compliance here at Zerodha, and I've been part of Zerodha since we were a five-member team working out of one room office. This is probably the first time that I'm interacting directly with you all, so I wouldn't want to miss an opportunity in thanking you for the love and support you've given us in growing the business to the place it's in today. One of the reasons for today's webinar is to basically clear the air around the confusions that exist around the whole NRI investing space. Typically a client approaches a broker to open a trading and demat account, gets asked for 2 dozen documents which the client wouldn't be in a position to give, and then eventually he loses interest to invest. At Zerodha, we've always believed in this approach of simplifying things so that everyone understands concepts better, and basically just to make our own lives easier. In the recent years, we've been able to garner a lot of interest from clients outside of India. And what's also helping this cause is probably the markets touching, all-time highs. So, yeah, without further ado, let's get started. So the first thing is to ascertain if you're an NRI or not. So who qualifies to be an NRI? So according to the regulators that govern the capital markets in India, one will have to determine his residential status according to the FEMA rules. Now, FEMA is basically Foreign Exchange Management Act, which formulates all laws related to foreign exchange in India. So, according to the FEMA Act, an NRI is defined as a person residing outside of India who's either a citizen of India or is a person of Indian origin. So, it's essential to understand that you have to have some Indian connection for you to qualify yourself as a non-resident Indian. Now, to give you an example, let's assume you've been hired by Goldman Sachs India and for some reason of work you've been asked to go to the US for an indefinite period. Now in such a case your residential status would change from being a resident to that of a non-resident. Now if you're someone who is of Indian origin and have been conducting business or are practicing a profession outside India, your residential status would be that of an NRI too. Now that we've determined who a non-resident is, the next question is what's required to open and operate a trading and demat account in India. As always, there are a bunch of prerequisites before you approach a broker to open a trading and demat account. The first thing that you'll have to do is approach a bank and open a NRE or a NRO savings bank account. For this discussion, I'm sure you all know what the difference between a NRE and a NRO account is. Now, for the ones who don't, the difference is basically in terms of the repatriability that each of the accounts offer. Now, the term repatriation is the ability of an asset to be converted from a foreign to the investor's home country. Well, now that we've determined who a non-resident is, the next question is what's required to open and operate a trading and demat account in India? As always, there are a bunch of prerequisites before you approach a broker to open a trading account. The first thing that you're required to do is approach a designated bank and open a NRE or a NRO savings bank account. Now, for this discussion, I'm sure you all know what the difference between a NRE and an NRO account is. Now, for the benefit of those who don't know the difference is in terms of the repatriability that each of these accounts offer. Now, repatriation is basically the ability of an asset to be converted from a foreign country to the investor's home country. Now, to break it down further and to make things simpler, I'll give you an example. Let's assume you're working at Goldman Sachs. Your salary would be credited to you in US dollars. Assume you'd wish to transfer a part of this salary to your account held in India. Of course, the only way you can do it is by converting the dollars into Indian rupees and then hold them in your Indian account. Now let's assume the other way around. Assume you want to transfer funds that are lying in your INR account and convert it into dollars. Now since money is moving outside the country, there are regulations that are imposed by the government. Now with the NRE account, you're free to convert as much INR to USDs. But what happens in an NRO account is that there's a restriction. The restriction is that you can only transfer up to $1 million per year from your INR account to your USD account. I hope that makes things clearer. Now that you've chosen the type of account you wish to open, you'll have to seek the help of your bank and obtain a PIS permission letter. Now, the PIS or Portfolio Investment Scheme enables NRIs to basically purchase and sell shares and debentures of Indian companies that are listed on the stock exchange. What it does is that all the transactions that happen on the stock exchange are routed through the NRI savings account that is held with the designated bank branch. Now, let me just show you what a PIS permission letter looks like. Once you have your bank account opened, the PIS permission letter ready, it's time to approach a SEBI registered stockbroker to open a trading and demat account. You can open up to 2 trading accounts with the same broker, one each mapped to your NRE and NRO savings account. Now, a stockbroker will ask you for certain documents to open a trading and demat account. And let me share you the list of documents that we require at Zerodha to open a trading and demat account. So the first thing that we'll require is a copy of the PIS permission letter. Now, in the previous slide, I showed you what the PIS permission letter looks like. This PIS permission letter will be given to you from the bank that you're opening your bank account with. Now, the second document that we'll require is a copy of the FEMA declaration. Now, the FEMA declaration is basically a declaration that states that as a client, you're complying with the FEMA regulations with respect to buying and selling of securities in the Indian capital market. The third document that we'll need is a copy of PAN card, which serves as a proof of identity. The fourth document that we'll need is a copy of your overseas address proof. Now, an overseas address proof could be a copy of your driver's license, not issued by the Indian government, of course, or even a bank statement that you're holding with any foreign bank account. The other document that we'll require, if you have a copy of an Indian address proof, you can provide that as well. We'll keep that for reference. We'll require one copy of your passport size photograph, and we'll require a proof of your bank account. Now, the proof of bank account could either be a cancelled check leaf or a bank statement. Now, this is a new document that we'll require that's called the FATCA declaration. Well, up until recently, we did not really insist on collecting the FATCA declaration. But in the recent years, after the intergovernmental agreements with the US, all NRIs are required to provide a copy of the FATCA declaration at the time of account opening. Now, the links to download the formats of the FEMA declaration and the FATCA declaration, I've pulled it from ZConnect and I've made it available in the description link of this video. Now, an additional requirement with all documents that you're submitting is that it all has to be attested by a competent authority. Now, who's a competent authority? It could be someone that you are interacting with at the Indian embassy. It could be a notary public, or it could be a local banker. The purpose of this attestation is because the rules of the regulator is that you'll have to complete a process called in-person verification. Now, the in-person verification basically requires us to establish the existence of the person whose account is getting opened. Along with that, we're also required to verify the documents provided by such person. The attestation will not be required if you're in India and you're meeting someone at Zerodha during the course of your account opening. Now, this attestation merely acts as a proof of verification. Now, after Zerodha receives all of these documents, the documents are processed at our account opening desk. And of course, your account gets opened. This is communicated through you through a welcome email that is sent to the registered email ID. Now you'll have to get started with your trading, right? Now, how does trading work is that what happens in the case of a resident account is that when a resident Indian wants to trade, he just transfer funds from his linked bank account to the trading account using the payment gateway or by any other means that is available to him. But in the case of an NRI account, you don't transfer funds to the broker. Instead, you transfer funds from your NRE or the NRO account to your PIS account. Now, the bank where you're holding the PIS account will inform the broker of the availability of funds. And based on the information that we receive from the banks, we would update your trading limits. You're then free to buy and sell stocks. Now, remember, as an NRI, you cannot do intraday equity trades. Also, there are certain restrictions imposed by RBI about what stocks you can buy and what you can't. The link to the list of stocks which are banned by RBI is again available in the description of this video. Now, once the trading session is completed, what happens is the brokerage processes the trades and generates the contract note. Along with emailing you a copy of the contract note, an additional copy of the contract note is generated and is emailed to your bank as well. The bank subsequently processes the contract note and then credits the customer's account and settles the transaction. Now let's assume there's a purchase transaction. In case there's a purchase transaction, the broker reports this purchase contract note to the bank. The bank in such a case debits the client's PIS account and credits the broker settlement account. The vice versa happens in case there's a sale transaction. In case of a sale transaction, the bank debits the broker settlement account and credits the client's PIS account. The interesting bit to know here is that there's no money movement that happens directly between the client and the broker. All of the transactions are always routed to the client's PIS account. This is how the settlement of an equity trade works. Now that we've covered how the equity account gets opened, let's look at F&O trading. NRIs are allowed to trade in the F&O segment, but they can do it only on non-repatriation basis. This means that if you wish to operate an F&O account, you can do it by mapping only your NRO savings account. What you'll have to do is you'll have to approach a custodian who will help you obtain a custodial participant or a CP code. Now the CP code is a mandate for all NRI accounts to trade in the F&O segment. If you're trading at Zerodha, we'll help you obtain a CP code through ILNFS, who will act as a custodian for all your trade. Again, there's no requirement for you to transfer funds to your broker's account to trade in the F&O segment. The funds are kept with the custodian. The custodian updates the broker about the availability of the funds. Similar to how it works in the equity segment, the broker updates the margins on the trading platform and then you're allowed to trade. Subsequently, at the end of the day, the contract notes get generated and they're reported to the custody. And the custody makes good the charges like brokerage, transaction charges, stamp duty, etc. to the broker for the service he's providing. Now that we've learned about trading and settlement, let's figure out how much it costs to trade. This is probably one of the factors that any client would look into before deciding on the broker of his choice. At Zerodha, for equity trades, we charge a brokerage of 0.1% subject to a maximum of rupees 200 per order. It may seem to you that the charges are relatively high considering that we offer brokerage-free delivery trading to our resident clients. The only differentiating factor is that for an NRI client, there's incremental effort involved. Effort like setting up the margins, reporting contract notes, following up with the banks for settlement of trades, reconciliation of funds, and other processes like these. Now, all of these additional efforts add up, which is why the higher costs. Now, for F&O trading, the brokerage is 0.1% of the order value, subject to a maximum of rupees 100 per order. In addition to brokerage, there are other charges like transaction charges, STT, stamp duties, service taxes, but then these remain common to all investor types. Now, apart from the broker who's charging you a brokerage for the service he's providing, the PIS bank where you've opened your bank account may also charge you a fee for every contract note reported through them. Now, the charges may vary anywhere between 50 rupees to 300 rupees per contract note. Now, if you're intending to open an account at Zerodha soon, I suggest you speak to someone from our sales team instead of approaching the bank directly to open the NRE or the NRO account. We'd probably help you get a better deal than what you'd get otherwise. Now, taxation is probably one topic that is sure to generate a lot of doubts for everyone out there, especially in the context of, the capital markets. And I have to thank Nitin for simplifying this whole enigma that is taxation specific to stock markets. The module on Varsity and the blogs on ZConnect have to be the simplest knowledge source out there on the topic. Now, even for this talk, I've used these topics for reference. Now, as I mentioned earlier, all contract notes are reported to the banks where you're maintaining your PIS account. The banks basically use these contract notes and prepare day-end reports at their end. They compute the profits and losses for all your trades and then deduct appropriate TDS and only then release the funds to your PIS account. The different types of gains that you stand to make when you're trading equities is either long-term gain or short-term gain. Now, if you've bought a stock, held it for less than a year and sold it, the gain arising out of such a transaction would be termed as short-term capital gain, and it's taxed at a flat rate of 15%. Now, if you've bought a stock, held it for more than a year and sold it, the gains that you make result into long-term capital gain. Currently, the Government of India has exempted all long-term capital gains from any taxes. Income from trading in the F&O segment is considered as business income. So if you're profitable, you have to add such gains to your other income and pay taxes according to your existing tax slabs. Now there's a whole host of information available on the taxation module of Varsity, again the link of which I've shared in the description of this video. In closing, I'd like to say that although opening an NRI account seems like a daunting task, we're always there to help you out with any queries that you may have. Just shoot out an email to nridesk@zerodha.com and we'll get in touch with you and help you with the entire process from account creation till account activation. Thank you so much, guys. Have a great day.